In this presentation, we're going to create an invoice from a purchase order. In other words, we're imagining we had someone come into our shop wanting a custom product, in our case, a custom guitar. We then ordered it from our vendor using a purchase order. Once we then get the guitar from the vendor, we could use that purchase order to populate the invoice, which is quite nice. Let's zoom into it with Xero. Here we are in our Get Great Guitars dashboard. We're going to start off by opening up the trial balance. We've seen an invoice before, so we're just going to go right to the trial balance, which is easier to analyze. I'm going to go down to the reports here instead of going down to the trial balance in my favorite reports, just in case you don't have the trial balance in your favorite reports. It's going to be down here in the accounting section. We're going to be down in the trial balance. I do recommend putting that into the favorite reports if it's not there so far. And I'm going to be right-clicking on the tab up top. We're going to duplicate that tab, so we'll have our report to the right, the information data input on the left. Then I'm going to go down to the flow chart just to recap our story here that we have. Here's the story. And we had a customer come into the store. They want a custom product, in our case, a custom guitar. We then said, okay, we're going to go to the vendor and request it. We requested it with a purchase order. No financial transaction happens when we have the purchase order. It's just a request. Then we imagine the custom guitar comes in, and there's two things that we have to happen. One's on the vendor side of things, and one's on the customer side of things. On the vendor side of things, we're then going to take that purchase order, possibly create a bill with it, because the bill is going to be attached to the guitar, and we're going to have to pay for it. That'll put the guitar on the books as inventory and create the fact that we owe the vendor money, a payable. Then we're going to take that guitar, jump on down to the customer section, and we're going to say we got this guitar specifically for this particular customer. In our case, it's going to be Eric Music is the customer that purchased it. So we're going to create an invoice now, starting the customer cycle with that guitar that we have now ordered custom for this customer. And we're going to populate this invoice directly from the purchase order. So we're going to kind of connect these two out, which is a nice feature to have. All right, so that's the story. We're going to be minimizing this. I'm back to the trial balance. I'm going to make the trial balance as of January 31st. So we're working in January. What's going to be the effect on the accounts once we do this? Well, it's just basically an invoice that we're going to make. We're just going to make it in a cool new way. So the invoice is going to be obviously increasing the accounts receivable, as we've seen before, by the full amount. Invoice plus the sales tax. The other side that's going to go up is going to be the income down here in the income statement accounts. Merchandise income is going to go up, but only by the amount that we get to keep. The difference is going to be increasing the payable, which is going to be to the sales tax payable, which the state is going to take from us. Then we're going to be decreasing the inventory for the cost of the inventory going down. The other side being the expense related to the inventory that we had to expend. That's going to go to cost of goods sold. Let's do it. Let's go to the tab to the left to do it. So tab to the left, we're going to go on back to the dashboard. So I want to be on the dashboard. We're going to look for that purchase order, and then we're going to use the purchase order to make the invoice, which is going to be really neat, really cool, great stuff. We're going to be down here in the bills you need to pay. We're not actually looking at the bills here. We're looking at the purchase orders, but it's still in the bills, and purchase orders are kind of grouped together. Bills on top, purchase orders on the bottom. We don't have any open purchase orders. We're just going to go into the all transactions here, or see all, which is all the transactions, kind of like for the purchase order. And so here we have them. Now they've already been billed out, so they're all in that kind of build out section on this side. Now we're going to use it, however, to create the invoice. So we're going to say the one we want is this Epiphone one this time. I think we'll do the other one later, but the one we want is here because Eric Music is the one that's asking for their guitar, and we have that one, and that's the Epiphone one. So we have the purchase order, and then I'm going to select the drop down up top, and we're going to go down and say we need to copy this too. Copy it too, not to the bill as we did last time, because we're not paying Epiphone. We already did that. Now we want to get some money from the customer, so we want to make an invoice with it. We're on the sales side of things. So we're going to create a draft on the invoice, and there we have it. It populates the whole thing for us, and it puts the item down here for us and everything, and it even picks up the right amount. It's not the cost that it put here, which was on the purchase order. It was $400 on the purchase order. It's $500 here because it's being driven by the item, and now it's because it's on an invoice. The system is smart enough to know that it needs to be picking up the sales price and not the cost. So it all works out just beautifully. And then we're going to go up top, and all we need to do is assign the customer, which is Eric Music, which might be a new customer for you. I messed up and I put this in there before because I was testing. In any case, so if you have to add it, add the customer, which I did last time. So I think you probably would have to add it if you're following along here. And then we're going to say that the date is going to be the 25th. So I'm going to pick up the 25th on the date. I do need a due date because if I don't, the system tells me, hey, we do recommend you put the due date. They nicely remind me that a due date would be something that is typically beneficial to have on the invoice so we can sort when it's due by. And then we have the item down here. Everything looks good. We have the sales tax calculated on it. So there it has standard invoice. What happens when we have an invoice? Well, we know that it's an invoice, so the accounts receivable is going to go up. It's going to go up by the full amount of the $547.50. Then the other side is going to be on the income statement, but it only goes up for sales of $500. The difference is the sales tax, which the state kind of strong arms us and forces us to pay to them, which is the $47.50. That's going to go into a payable account for sales tax payable. Also, the inventory is going to go down because we sold this guitar, which is the Epiphone Les Paul, not by any amount that's on this actual invoice, but by $400, the cost, which this invoice knows about because of the service item that we set up that has the $400 cost in it. Then the other side is going to be going to cost of goods sold, which is an expense account, increasing the expense account, decreasing net income. Let's check it out. We're going to go ahead and approve it down below, see if it gives me any errors or if I messed anything up. Because sometimes I do. It's kind of rare. I'm getting good at it, but it's pretty there. We've been approved. All right, I'm going to go to the trial balance. We're going to update the trial balance. So let's update. Only deal with reports that are up to date. If it's not up to date, I'm not dealing with it. We're going to be in the accounts receivable. Let's go into the accounts receivable. It should be increasing by the full amount of the sale, including the sales tax. Scrolling on down, we're going to check that out. Is that it? There it is. Eric Music, the full amount right there. So that's totally what I expected. Then we're going to go back and we're going to look at the other side, which is going to be on the income statement, which is going to be in the revenue cycle. So that's going to be on the bottom of the trial balance. So we're down here. Merchandise, it's going to be in the merchandise sales. We're going to open that up, but it's going to be on there not for the full amount, but just the amount we get to keep, not including the sales tax, which I believe was $500. Let's check that out. And there it is. All right, the difference between the two, that's what the state takes from us. So we're going to go back up and we're going to say that's going to go into the payable account for the sales tax payable. So if I go on back up and check that out, that's in the liabilities section. There it is. I'm not even going to click on it, but you know it's there. It's in there. And then the inventory is going to go down. So here's the inventory because we sold a guitar, this being the Epiphone Les Paul, one of our more popular models of guitars that we sell. It's going to be in there, and it's going to be in there not for anything that's even on the invoice, but for $400, and that's going to be what we paid for it. So it was driven by the invoice, but $400 is what we paid for it, not an amount actually on the invoice because the system is smart enough to know the cost as well if we're tracking inventory. The other side then going to cost of goods sold, which is an expense account. It's going to be increasing the cost of goods sold, the expense decreasing net income, net effect on net income of the invoice. Revenue goes up by the sales price, expense goes up by the cost, and the difference between the two is going to be the increase in the net income. There's the $400 cost. Sales price was $500. Net increase, net income, the difference, $100.